Good afternoon and welcome to NYFP. On this Friday, we are seeing the major U.S. stock averages trade within a narrow range and remain mixed. Joining me now is Peter Cardillo of Rockwell Global Capital. Peter, good afternoon. Thanks for joining me.
Nice to be back.
Well, we are seeing mixed trading for the equities, but we are on track for another week of gains. This would make it 3 straight weeks of gains for the equities, and we did see record highs for the S&P as well as the Dow. So do you expect more of this to continue?
You know, I think we're probably going to continue with the bull market. However, I do think the fact that the dollar is getting stronger and we're seeing the dollar index nearly at its high for the year is probably going to cause a bit of indigestion for the market next week.
And Peter, speaking of what we've been seeing in the currency markets, we saw the dollar yen not just go above the 100, but above the 101 level for the first time in several years. Today we had the G7 meeting taking place in the UK, and we will have finance ministers that are talking, but it is an informal gathering. So what can we expect to hear out from this meeting?
Well, I think, you know, we're probably going to obviously hear from Japan saying that this is not a Japan is not entering into a currency war, and I suspect that the group as a whole is probably going to reiterate that there is no real fears of a currency war right now. But you know, the yen has really weakened here. The dollar has strengthened in terms of effects of economic activity due to the stronger dollar. I don't think it's going to have much of an impact just yet. But if this rise continues, we could be hearing a lot of grumblings about the effects of a stronger dollar in terms of U.S. exports, and that would mean, you know, slower growth ahead.
And while we're on the topic of finance ministers as well as central banks, so Bernanke spoke in Chicago today. It wasn't a monetary policy speech, but rather he did highlight some of the risks in the financial markets, like given the low interest rate environment. What did you take from that conference? Well,
you know, basically what he was saying, hey, look, you know, we're still not yet totally out of the woods from the 2008 subprime crises, and you know, he's basically saying that the economy is doing okay, but there are still problems out there. And so I think if you really, you know, read between the lines here, I think he's basically once again taking the lead in terms of low interest rates and market stimulants. Now, you know, that brings us back to a very heated debate that we had over the past several days among Fed members, you know, some hawkish, some less hawkish, some saying that we're going to need even more stimulants. So I think, you know, it's a balancing act among the Fed members, and I think Mr. Bernanke today, you know, laid out the risks that are still present within the financial system.
And in the upcoming week, Peter, will be getting more Fed speeches, as well as a lot of economic data releases. We get retail sales, housing figures, inflation, as well as consumer sentiment, and also regional manufacturing figures. But also from the Eurozone, we get first quarter GDP figures. What will you be watching? Yeah,
well, in terms of the Eurozone GDP, we're probably looking at a number close to maybe 0.7 to 0.8%, which is weaker than we saw the last time around. In terms of domestic economic numbers next week, I think most of them will be on the positive side, looking at a very scant rise in retail sales for about 0.2%. Ex-autos maybe 0.1%, leading indicators up by about 0.1%, and industrial production up about 0.2%. So most of the economic numbers next week are going to point to growth, but modest growth. And I think the biggest concern that we have out there next week is the rising dollar. If this dollar continues to move higher and the yen continues to weaken, it's obviously going to impact all of the currencies, and that is going to have a negative effect on commodities. In fact, we're seeing that today.
Okay, Peter, well, we'll keep an eye on that U.S. currency, and we'll talk more about the economic data on Monday. Thank you so much, and have a great weekend.
My pleasure.